Hello, guys. How we doing tonight? Awesome. Awesome. Gonna ask you guys for a quick sound check, quick video check as well. Can you guys see all right? Awesome. Awesome. All right, so we'll get into it pretty easily today, right? We had very clear weekly outlook, right? Direction in a way of time wasn't clear, meaning I did not know if it wanted to go up first or below first. That was unclear to me. We were ranging. I don't know if it's going to target buy side or sell side if it's ranging on both sides. But now we were expecting manipulation, and that's what came today, most importantly. Let me just remove one of these power of threes so I don't see the monthly candle, which at the moment is the same as the weekly candle. That was bugging me at the moment. We had a beautiful move down with SMT at the previous week's low, right? If we look at the weekly candle, you notice that we've taken out previous week's low on ES and not on NQ. So sorry about that notification. Let me just mute that. And that SMT in a daily chart is shown through the swing points. Now, SMT, when we are talking about a daily chart, and most importantly about key levels in liquidity, right? And oftentimes all swing points in the daily will be linked to key levels of liquidity, meaning a weekly high or weekly low. Oftentimes that's how you'll see it, but still it's important to note that it was previous week's low. So it's a definite area where we anticipated manipulation. And once that manipulation was met, we could start looking for longs. And if we go down right away to the 15-minute and we just look at the daily power of three, right? This is my candle I have right here. Yes, it is still looking at midnight. Perfect. So I'm always utilizing, by the way, the midnight candle when I'm talking about daily power of three. The reason is at any point in time, you want to look at what would it look like if you use settlement as close first on a daily chart. Well, you'll see it. The differences in the candles, pretty much, it's the differences in the closing price in this very particular manner. And the opening price of my candle is not at the same time. So whenever I'm looking at a daily chart, I get no choice. I'm not seeing the daily chart based on a midnight open. There is currently sound. Sorry, just had to insert a quick question. In French, by the way, for you guys who aren't speakers, that is in French. But on that note, I'm going to keep going and remove settlement because I do not utilize settlement as the close of the daily candle. I use the 5 p.m., right? When we have the gap in the market closed and markets reopen an hour later. But enough talking about this very specific thing. I always utilize the midnight candle whenever I'm looking at power of three. So I'm looking at the midnight opening price as shown through this specific indicator, and I'm looking for if I wants to be an open low or an open high, that very specific thing. So in this case, at our New York Open, it would have been okay, basically. I don't know a better word to say it, but okay to anticipate price being an open high. Why? Because we opened, we expanded higher, taking out liquidity, and we're now expecting lower prices. So based on the power of three, and also the fact that we did have SMT at the highs, let's just go to a 1 minute chart very quickly. We look at the short-term price action at the highs of the London session, you'll notice that ES went for equal highs, which I regard as it has induced that level, so it has not taken it, but it is differing than Nasdaq, and especially in these types of cases, I like to pop this little layout I have, which also looks at YM. So if we just head over to 2 a.m. very quickly here, and we look at these highs very quickly, you'll notice YM on these highs went higher. So if I just try this out for you guys, YM went higher, ES went equal, right? Again, and NASDAQ, when comparing this swing point, I know it's a little bit flat. There's a lot of value and data here. Why NQ, I was going to say YM again, went lower. So we have divergence between NASDAQ and ES, but still, since ES is making equal high levels, which it often does, I like to use YM as my confirmation of divergence. So just in case you guys didn't know, that's how I utilize SMT with YM. I never look at it unless there are equal levels on ES, and then I want to confirm. If YM was lower here, I would have disregarded this as potential SMT because there's no divergence between NASDAQ and YM, which YM will often show divergence. So definitely lower probability if they don't align like this. But in that specific case, it was probable that that was going to form the high of day, or at least the current high of day. Now, there was also a London framework, right? Because you had your Judas swing, overnight Judas. But since we already retraced so high, once I saw the 1 minute price action, which we will be looking at in a second, I noticed that I was not going to be anticipating higher prices until our manipulation is complete. This is very simple. We had a lower objective, previous week's low. We took out previous week's low, which let me mark out on ES so we can actually see it well. I'll just mark it out as sell side. And we did that on NASDAQ, which formed the higher time frame SMT, right? Which you can see from this SMT right here. But from that specific point, I could anticipate that ES was going to go to its objective, and then the assets could then go up and complete this London framework, which is one of our intraday draws on liquidity from the One Trading setup for life by ICT. Now that we have our framework in place, we have our narrative, we know where it's going to go and how it should go there, right? Because you can't know how it will go there up until you get down to business and you start looking at your price action. First thing I noticed when I jumped in was the 9:30 a.m. SMT. Now we had 10 a.m. news, so you would have waited for that. Now there are specific cases. I'd like to utilize this high because it was the highest high from this point, but the main SMT we saw was at this level. In the conservative approach, you wouldn't trade before that news. Sometimes it is okay to trade before news, sometimes it's not. And that specific data has been undecisive for me, if I can say it like that. It's not a big enough basically probability of it doing what I think it's going to be doing on that specific day, meaning expansion or manipulation, for me to be able to risk live funds on it. So on my personal account, I am never trading before news that is at 10 a.m. pretty much, because I don't want to get slipped out. I don't want to get margin called. I am not going to risk my whole account, and I'm never risking enough for it to be the case. But if I'm getting slipped and my 1% risk just turns into a 6% loss because I got slipped trading before news, it's never going to be worth it to trade these. So I just decided I wouldn't be. So if we do mark out that 10 a.m. price very quickly, at that 10 a.m. time, sorry, that's when we had our news. I am going to double check very quickly what news it was specifically now. What was it? Sorry, I'm jumping on Forex Factory here. We had PMI. That's what we had. So PMI at this very specific time, 10 a.m. Now, what do you want to see when you have that 4-hour news and you've seen bearish price action, which this delivery off of the SMT, right, respecting on side of race, we retraced into the order block, which led again to further SMT. Here, I'll stay on the cross so you guys can see. Right here, this is lower than our previous swing point. Right here, sorry, than this candle, which did not actually form a swing point. But this is still SMT. Is it SMT I would use as an entry? Never, but it is still SMT. So just from this beautiful delivery to the downside, and right, I am looking at PD arrays like this on-side PD array that just got respected beautifully, tapped barely above. And I also had the new week opening gap because I like to show expansion through it. It's not something we'll be going over today. I don't want to start deep diving into that. All of this to say we had beautiful delivery to the downside before the news. So understanding that there is a news, you can anticipate a retracement into our current range, and you'd like to see the candle, your 4-hour candle, open, go and put up a high to then keep on expanding lower to previous week's low, which was already our objective, which was already predefined in our weekly outlook, right? So just by staying on side with what we could see and understanding the daily power of three, right? We are below midnight open, but we've put up a high. Then that specific way, you can understand that price was going to continue going lower up until the weekly objective was met, right? The daily objective was met. But since ES took it, NASDAQ doesn't have to. So if we look at the specific time, right, it's a 1013 candle right here. On NASDAQ, we took out some 1-hour liquidity at the same time, which I'm not going to show because it was of no importance. One thing I do want to point out is the beautiful 15-minute fair value gap. I remember that this morning I utilized this 15-minute fair value gap. So I'm going to mark it out because anytime I am trading intraday, so during my day, I'm utilizing my 15-minute chart to get a bigger understanding of long-term retracements, meaning a retracement that doesn't last 1 minute, right? It lasts 10 minutes, 15 minutes, sometimes an hour, a full hour is a retracement, right? We've seen from this move down and then delivery higher that this whole move, if I can measure, please, this whole move was 30 minutes, right? So when I'm trying to get an understanding of the intraday price action, then I want to be able to see my intraday delivery. Sorry, this is bugging me. I hate having the big orange in the background, but I was just too lazy to move it. Now, I'm not looking at the respect of the 15-minute fair value gap here because we're not at this point yet. You just had the news. Now, you cannot have a more beautiful open high than this, right? We have not put up a lower wick at all. So you definitely instantly opened into a high. And where is it going to retrace? Well, very simple. If it's going to keep going down, it's going to retrace to my premium array, which is where? Well, pretty clear to see now. Is this 10 a.m.? Okay, so this was my range at the time. So just to give you guys insight, it's pretty weird to see. Maybe if I go on a 5-minute and show you guys, it will be easier. So see, before the news, this was the low of my range. This was the high of my range, of my latest expansion range. But since we're looking at it on a 15-minute, this candle, and this candle just changes the range. But when you were looking at a retracement higher, you would have been looking at this most recent range. And most importantly, our first premium inefficiency in the 15-minute is where you would like to see price respect to continue lower. Now, it could have dug into the order block as well, but I was looking for a reaction, an open high of the 10 a.m. candle into that fair value gap. So I'm just going to move this over to the right because that's what you got, right? Why did I not short here? Well, very simple. We had not yet tapped into my point of interest. And after that point of interest was formed, and as well with SMT, because if you do look, there's SMT everywhere. I understand a lot of drawings, I'm sorry, but if you do look over at ES right here, you'll notice that you had a SMT confirming that idea, because anytime price is going to reverse, you will see some form of divergence. It just has to. So it is good confluence to your first original idea. If you see, we had beautiful delivery. Now, did that delivery offer a lot of entry possibilities? Well, not on NASDAQ, not at all, but NASDAQ was the stronger asset, right? If you're trying to short, you want to look at the weaker asset. And also, this is one of those times, as I've talked to you guys a little bit on, that you had to anticipate the breaker block, meaning you had to understand that, well, first of all, this is a breaker. And also you had to take the entry on the inversion fair value gap before it was inverted, right? Because if we do look here, this did not invert the fair value gap. This inverted it, and then we never retraced into it. So is it the most beautiful trade? No. It's one of those trades that for most beginners, they're going to miss it. Why? Because there's no technical entry. There is no mechanical entry here. It's all about understanding, okay, I see the SMT, then I see the change in the state of delivery, and then you can either take a breakout from just inverting the fair value gap, But most of the time, if you start doing that without understanding, you'll just have a big retracement, have the wrong stop loss because of your entry. So definitely, this is not one I'm going to spend a lot of time on, if I can say. You did have a trade before news, and that is not something I'm going to spend the time on again. Why? Because I want to try and frame these for beginning traders. And even for more experienced traders, sometimes we do forget that simplicity will provide the best results every time. Up until you get like 5 to 10 years of experience inside of you, you need it to be simple because you have so much to worry about outside of it. You have risk management, you have your emotional control. After that, you got to journal, you got to manage, scale up your capital. There is so much to do in trading. Why not have your model be the simplest part, your technical analysis be the simplest part, right? That is the easiest way you could take it into account, pretty much. But if you did look for a scalp before news, of course, I am going to show the beautiful unicorn at 930, which we did not respect the fair value gap, but your stop would have allowed for it with the 3PD array stop loss rule based on this breaker. Then you had continued delivery with another bearish breaker through a unicorn before expanding lower. It was beautiful, quick price action followed by your 4-hour retracement and then continuation lower. But now the best opportunity definitely came afterwards, right? Once that objective is met, all of a sudden I now have SMT at this level, right? And more specifically, wasn't it at 14, I think? 1013. So yeah, 1013 you had SMT. As you can see, we formed the swing point right there because we did have to wait till 1015, right? We had to wait until the next 15-minute candle, open low, and then expand it to a high. And that is the move you would be looking for trading, right? Because as we said again in our weekly outlook, you would have waited for manipulation to then trade the distribution. But with hindsight, looking at this is not clean distribution, right? You had a very high resistance retracement followed by basically lackluster price action of very little expansion. And as soon as we got expansion, retracement into it. And by the way, this target objective is at London highs, which remained open on ES just for the full day. So you did have SMT at this point. But if we dive lower, what do we know about price? Well, if I see price do an aggressive move, I'm going to expect a retracement into our range, right? So before considering any trades, I'm going to make sure that we retrace into our range. Now, recently, and yes, at this point, that is the range, and then we break higher, that is the range, that is the range. I'm looking for retracement into our range, respecting a non-side array to then give me a confirmation that I can look for higher prices. Now, what do we know about these retracements? Well, I have a continuation model. Whenever price doesn't give you an entry on the first leg because it is too rushed to go, right? Too rushed to do the specific move, or possibly you entered here not recognizing that we were in deep premium and got stopped out and are now looking for a re-entry. Whatever the specifics of it, you might be looking for a continuation of this idea because it is still valid. You should be looking for higher prices. You have consolidation right here, low resistance failure swings along the way, and now you flipped at a key level with SMT. So it is a high probability opportunity to be looking for a long. And now the most probable thing, right? The highest probability thing that I know at least is SMT. And as you can see, you had beautiful SMT right here as ES took out the low it just made while breaking that previous month's low. So clearly ES was the weaker asset the full day. So at least we've been clear on that. We had no search and destroy. Price action was clean, just a little higher on the resistance following this downwards move. It's starting to have a lot of blue here, so I am going to move this into some purple. So we have some different colors. Looking at this, where did you retrace to? OTE. I like to utilize these levels, but the truth of the matter is premium and discount, right? Where did we retrace to? To my first discount inefficiency. And how I like to do it is always going to be in a 5-minute chart. But now in a 5-minute chart, I have too big of a candle right here pretty much, which means this is an order block, but where am I going to use in that order block? I would utilize the full candle first and then look for consequent encroachment, but it closed through it, right? So that got disrespected. So what could give me confidence that price could keep going up following this? Well, because my 5 minute is so unclear, just like we do with the 15, right? When the 15 is too tight, we go down to a 5 minute to gain more insight into price. So now going down to the 1 minute, I would look at my first discount inefficiency. Now, this inverted fair value gap is not in discount. It is at equilibrium. This fair value gap is at equilibrium. Whereas our first discount inefficiency, it is this fair value gap right here. You'll start to notice the more you backtest these things, if you do backtest my model, you'll notice that the things I'm saying aren't bullshit. They happen every day. They always happen in the same specific way. So no matter if it's high resistance or not, all this time you should have been sitting on your hands waiting for us to tag this specific price level. When are we not going to tag it? When there is SMT. Why? Because if one asset took out a specific low and discount, then I understand that the other one that is possibly stronger to the upside won't have to. Now that SMT was confirmed specifically at 1055, well, was created at 1055, so you wouldn't have had an issue with that specific way. So now retrace to a discount, first discount inefficiency, that gives you your signal that now price can start going up. And look at it, it's almost like that's exactly how it is. You formed a breaker block. Now, anticipating this breaker block, again, would have been better today. What I like to look for is the candle bodies. So whenever I'm looking at the swing high of my breaker range, I like to utilize the bodies. And once we do break those bodies, more specifically, once we close through those bodies, that is valid enough for me to look at this as a breaker block compared to waiting for it to break this high. Now, that would mean that your entry would be at this level. Here, I'll show it very quickly, and then I'll go over the conservative, purely mechanical approach. So your entry would be here, and more specifically, if I look, actually, this looks like a stop. Yep, so see, anticipating a breaker here would have been a stop. You would have had your low actually here, but that is a little more than 3 PD arrays. Let me bring you guys along through it. There's a, oh no, that's not a fair value gap, is it? High at 19,906. I was already away from my charts, by the way, at that point, guys, so I'm fresh on this setup. 19,906. The low of this candle is 19,906.25. We do have a 1 tick fair value gap, which is the cause of you getting stopped out, because 1 PD array, 2 PD arrays, and now 3 PD arrays. So you would allow it to retrace inside the inverse fair value gap. But what I like to do is when my stop is at the middle of a fair value gap like that, I'll just give it the extra, what was it, 4 handles to allow it to retrace into that fair value gap. But now it seems picked, and it seems chosen with hindsight. So I'm going to disregard this trade and look at it as, well, first a loss if you did take that understanding. But in this specific case, we're going to look more so at the mechanical entry, which came later, right? We had this breaker block formed. And yes, we had multiple breakers to the left, but I am always concentrating on the first breaker that was formed, right? And if we look short term, right, I'm looking at these lows, by the way, there is no short term SMT here aside from this, right? This specific. But we had swing low into swing high with no bullish candle, which means that this is a lower time frame breaker. Now, I don't teach people to execute below the 1 minute chart just because it is very hard to do. It's very hard to filter the information you see there. But just again, looking at a brain dead mechanical entry, you had this beautiful 1 minute fair value gap overlapping with this 1 minute breaker block, which gave you your unicorn. Now, if we look at the stop placement, you would have had a fair value gap. You have an inverted fair value gap right here, if you see it, through the form of a balanced price range as well, through the 1 tick. And you have another fair value gap below. So my stop would be at the low of this candle, 25 handle stop, nice clean number. Now, London highs were your target. Why? Because all of this trade idea is based on a London framework confluence, right? So you do have your understanding of your higher time frame order flow, right? Where is it going? How is it going to go? But your confirmation is through the London framework. And also this beautiful inverted fair value gap on the 15-minute, which I love that one, right? If you want to study something, just look at how we delivered, how we utilized that 15-minute fair value gap, which later inversed. Very beautiful price action on this gap today. But disregarding that, if we look at this and we take our rules, right? Where's my low-hanging fruit objective? Well, I'm already, if we look at the full daily range at that point, because you're looking for it to break the high of day, right? So you're going to concentrate on the full daily range. Now, looking at this, where would my low-hanging fruit objective be? This fair value gap, which we already broke and invalidated, which means where is my basically my low-hanging fruit going to be? Well, I'm going to look at a level of liquidity. More importantly, equal highs, equal lows. I'm going to look at a level that is too clean to be, and I'm going to utilize standard deviations of my breaker block to bring confluence. That easy. Whenever I don't have a clear objective, I'm going to use these. Now, this SMT formed relative equal highs. I see this, I regard this as inducement of this, and there was SMT between these highs at this point, so I understand that on ES, that is as well low resistance liquidity, right? Through all these failure swings, let's just say I remove the SMT from the morning ideas, right? Through all these are all low resistance swing points, so I understand that price will want to go quickly through those, so I'm going to target the high of this specific consolidation, which looking at this on a 5-minute must be relative equal highs as well, right? Just looking at this, failure swings. So a clear objective along the way to get to that objective, which is also in confluence with our reversal range. We could just wick through that high, sweep it, and then reverse lower. As you can see, we clearly expanded past this point, but this would have clearly been a good partial. And honestly, whenever I enter in a trade and I see, well, here, let's go through it mentally, right? You had a first expansion of 42 handles. So that was almost 1 to 2, right? You had a 25 handle stop. So if it just ran a tiny bit higher, you had your 1 to 2, and that is significant money. So just from this first run, I'm already breaking even my trade. Why? Because if it goes to R and then reverses on me, I am disregarding that trade. I want it to be a break even because it should not go up to R and then reverse on me. Through my model, through my studying of my model, I have found that specific logic. So I'm break even. Now we see a lot of sideways price action. As soon as we break this high, I'm taking profits. Why? Because it went up, I allowed it to go back down, but now that we've expanded through it, I could see a consolidation into taking out the highs to then go target lows. And in the best case scenario, I want to be in and out quickly. Now, the more time I spend in the trade, the lower probability it becomes the majority of the time, right? So I'm going to start taking profits quicker if I see that price is not giving me the outcome I'm looking for. So I would have taken profits along the way. So again, for example, let's say I had 3 contracts. I was planning on taking out 2 here at my low-hanging fruit objective, and then 1 more at my final objective, which is, let me just write it out, London High. So I had my plan, but now I have to adjust to current price action, which is high resistance. And since I was expecting manipulation on this very specific day and we had low resistance delivery, I expect high resistance afterwards. So just from all this, it is just basically I'm bringing you guys along my trade management rules, which is not something that you can put on basically on a sheet with a rule set. It is something that you just learn through experience. I know that personally, I get better results if I break even these trades after they've been up a certain amount of R, and 2R for me is that specific number for 95% of my trades. Unless I get a late entry, then I'll allow it to retrace more on me. And if I see consolidation, that I know I want to take profits out of this trade very soon, and I want to make sure that trade is break even. And now, of course, right? With hindsight, it did reach our partial objective, which were the relative equal highs. If you prefer to call it that way, you can call it the morning highs, the AM highs, pre-market highs, 8:30 highs, however you want to call it, right? But it reached your low-hanging fruit objective. From this point, you already had SMT, with NASDAQ breaking high of day, which for ES was that 931 swing, while ES, as you can see from this specific point, had not reached our highs yet. So just from this, taking out another contract here and understanding it is low probability, trailing my stop to this swing point, right, allowing it to retrace, but not too much. But honestly, at this point, you're already up 3R. So it's break even. You have one contract runner. You already made your money. You've taken your piece of the pie, and now you can allow it to go all the way to your runner, which allowed for, I believe it was 30 points more, almost 30 points more, all the way to London highs. Do you guys have any questions about this setup? I feel like I went a little bit right, a little bit left. Sometimes do that when I've had a tiresome day, if I can say so. I'm not seeing anybody type, so I'm guessing it's an all clear. Can I get a thumbs up from someone? Just making sure you guys can still hear me. All right, all clear. Awesome. Well, to me, that is the trade I want to be trading. And now, of course, again, with hindsight delivery, you'll see this and you're like, oh, this is so ugly, high resistance. But was the setup nice? Yes. It did what it was supposed to do when it was supposed to do so, because if we dive deeper, you'll see that this is the 1050 to 1110 macro. And as I say, every time the setup forms, I'll say it again. I've been saying it since February. 1050 to 1110 will spool against profitable AM traders. When you see a New York AM reversal, this is where it happens. That's just how it is. And now I'm not saying all the time, but whenever I'm framing a trade like this one, where we do go and target, basically I'm looking at 950 to 1010 to be my expansion into my objective. Now, it was a little variable since we did have 10 a.m. news, but the basis of it is that first macro brought us to our objective after retracement, right? Provided the setup to reach our higher time frame objective before we expanded higher, and then we consolidated high resistance retracement up until 1050 to 1110 macro, where we formed a setup to then go and catch higher prices. All right, so again, just you got to time the markets, right? We're trading time and price, not price and time, time and price. So if you're looking at the perfect pattern at the wrong time, it's going to be way less probable, especially when we're talking about the unicorn more specifically, right? You'll notice that if you just look at any random unicorn, you'll get confused because then you don't know the one you use. But you add your higher time frame understanding, your higher time frame narrative, how it is doing it, get confluences like SMT, like it retraced, respected my 1 minute discount and efficiency of my latest expansion range with SMT. Okay, now if it forms a setup with this protecting it below within this time and understanding that a big objective has been met with furthermore SMT, it doesn't get any better than this. But yes, the delivery was very high resistance. The entry wasn't the most beautiful unicorn, just like, right, if we're comparing to last Friday, where right in the morning, was it Friday? Yes. Right in the morning, we had a beautiful, beautiful unicorn, barely retraced into it and expanded 300 handles, right? No, it's not one of those. But the setup was what I call an A+. It was a perfect setup with a clear objective, which we did reach in a long time, right? But we did get to that level for a nice 4.19R. Again, not the biggest trade, but when you look at these handles, 100 handle trade, never going to complain with that. Small take profit here would have given you, what is that, 17, let's just call it 18 divided by 3, right? 0.6R. Coming up to that, I'm again thinking 3 contracts plus 1R, so you're up 1.6R, and then your last contract's taking profit at 4.2, so you're making 42 divided by 3 is 17, or am I completely wrong? I'm getting the calculator out for that one. 14. So plus 1.4R. So you would have made basically 3 point something R realized, right? When you start thinking in terms of, okay, but that's 4.19R for the full setup, how much will I get realized? If I perfectly executed that, you would be at 3 point something R. if we're looking at it, probably actually three straight, right? Because you had 1.4 at your final, you had 0.6 here, and you had this is 3, so basically 1 here. So 0.6 plus 1, 1.6 plus 1.4, beautiful 3R realized setup. Enough about this specific setup, though. I think you guys know it all in depth. I look at the PM session, even without looking at the result. There's one thing I could justify, and it's a lunch rate lower. But now it is completely against my daily bias. It is completely against my daily power of 3, and it doesn't make any sense for me to try and trade the afternoon because my daily objective has already been met. We met basically 2 daily objectives, 2 higher time frame objectives. We've taken out London highs, flipped the entire day after going lower to take out previous week's low with SMT on NASDAQ. So this is never a time where I'm going to hop on the PM session and look for continuation. This is a time where if I had 4 contracts here, for example, right, I do recommend trading micros. If you're trading big accounts and you're always on that 1 to 2 contract, you are hurting yourself. You need to be able to take partials when you want to be taking partials. So trade micros, trade bigger numbers for contracts. There's barely a difference in commission, and that would have allowed you to maybe have a 1 or 2 contract micro contract runner that could have held all the way to 4 p.m., which if I do look correctly, yes, all the way to 4 p.m., which would have allowed for an extra 1 point something R on this final contract, right? So definitely would recommend doing that 100%. If ever you guys are just concentrating on minis, I was stuck on minis for a while. I hated micros. It's not anything about them that is different. I just didn't want to be trading 30, 40 contracts. But I went into BK accounts, so now basically I'm trading minis like micros. But it would really help a lot of you guys by just being able to take profit so much more, right? So many more times, which basically makes it so no, you're not taking profits early, because that is just an error on a psychological standpoint. But I can take like 20% of my position here compared to if I have 3 contracts. Well, I have to take off 33% at this level. I can't just take a little profit, break even, make sure I come out of the day profitable, cover costs, cover commissions, right? It just makes sense from this specific standpoint. So, as I stated, I'm not going to look at the PM because to me there are no valuable opportunities. And yes, I do see the lunch rate on ES, right? I am looking at it. I see the lunch rate. I see the successful lunch rate with ES taking out the highs, both assets taking them out, and then ES being the weaker asset the full day, which means if you were shorting, you would have taken the ES short, which I believe came on an inverted fair value gap at this level, possibly. Anticipating the breaker, I did not look into it, and I'm not going to go in depth. Why? Very simple. Because your daily objectives has already been met. Now there's SMT at the highs. I'm not expecting the last 2 hours and 30 minutes of the day to do even half of what the morning did. And seeing what the morning did, and that the lunch was expansion, I'm just basically saying a bunch of stuff which, if you've noticed, are just more and more reasons for it to be a low probability trading session. And we do see the results. I'm just trying to bring you guys along the understanding of how I came to know that it was going to be a shitty PM session. Anyways, from this point, I would have just been holding a runner from the morning. And if you're looking at the PM, you shouldn't be thinking, okay, what kind of opportunities can I find? You should be seeing the morning and say, hey, I missed today's opportunity. Let's take a step back, focus, journal, study what happened today, make sure I don't miss it another time. That's how I think. That's what made me a profitable trader. So I do want to imprint this on you guys, and that's why I repeated it 20 times. On that note, though, we've been through the whole day. We are still going to have a price action review tomorrow, but that will be the last call for the week. And just giving you guys a reminder, I see a lot more people here tonight. From the announcements, you can see I am going on vacation this week. I'm leaving this week. and I will not be doing the weekly outlook next week and the price action reviews for the rest of the week after tomorrow's. I am going to be there tomorrow, and basically all of that will not be able to do because I don't know how my Wi-Fi situation will be. And to be honest with you guys, I'm going to be in vacation. I'm not going to be trading. I might trade, basically I'm going to trade the high probability trading day, which is one of the days that I'm going to be there, on the 5th, right, this Friday. But basically, I will be in chat. I will be in analysis. I'll send you guys some pictures of charts on a MacBook. I'll try and make those pretty, but definitely update you guys on the analysis. But I won't be present for any calls at any point in time, though. Just look for a member of the team to be online. We're always taggable. Just at us. At us, basically. That sounded very weird, but you can just at and write our names, at and write team, and you'll get any answers to your questions along the way. So that will be all for tonight. I wish you all a great night. Good luck trading tomorrow, and hopefully we'll see each other for tomorrow's price action review, which the event is now available at the top left of our Discord under events. Have a good night, guys. See you all tomorrow.